Tesla stayed profitable in the first quarter, posting earnings and revenue figures that topped consensus expectations, helped by the electric car maker's robust first-quarter vehicle deliveries and sales of pollution credits to other automakers. The company also said it's targeting annual growth in deliveries of 50% a year. The Palo Alto, California-based company led by billionaire Elon Musk reported net income of $438 million for the quarter that ended in March, with 39 cents of earnings per share on a GAAP basis, and 93 cents per share, excluding some items, beating a consensus estimate of 79 cents a share. Revenue was $10.4 billion, just ahead of equity analysts' expectations of sales totaling about $10.3 billion. Sales of regulatory credits to manufacturers of gasoline-powered cars and trucks rose to $518 million, the company said. That was the most ever for a single quarter. Those funds, which are pure profit for Tesla and nearly impossible for analysts to accurately estimate, have underpinned the company's profitable streak that's lasted more than a year after a decade of losses. The results were a strong print for Musk Co. Even though total revenues were slightly below bullish expectations, Dan Ives, an equity analyst for Wedbush, said in a research note. In a nutshell, we believe that gross margin performance was a standout relative to street fears heading into the print, as the company reported a GAAP growth margin of 21.3% compared with consensus estimates of 21%. Tesla's 7-quarter streak of profitability comes as it races to expand production in China, open its first European auto production facility near Berlin, and complete construction of a Gigafactory in Austin, Texas. At the same time, Musk's company is about to face vastly more competition in every product category as companies including Volkswagen, General Motors, Ford, Hyundai, Nissan and startups such as Lucid and Rivian ramp up or launch sales of their own battery-powered cars and trucks. A push by the Biden administration to dramatically expand sales and production of electric vehicles in the US means Tesla will have to work even harder to retain its lead in that space. As more OEMs join our mission by launching EVs, we believe consumer confidence in EVs continues to increase and more customers are willing to make the switch, the company said. Our Q1 order rate too was the strongest in our history, and we are moving as quickly as possible to add more production capacity. The shares gained 1.2% to close at $738.20 in Nasdaq trading Monday, prior to the results release. They were down about 2% in after-hours activity. The quarter marked our highest ever vehicle production and deliveries. This was in spite of multiple challenges, including seasonality, supply chain instability and the transition to the new Model S and Model X, the company said in a statement.